On the last trading day, July 21, Friday, we detected unusual options activity on Amazon. It ended the day right at $130 per share. And these unusual options, 19,000 of them for the August 4s at the 130 strike calls. Okay. And not only that, the 140 strike calls, also 19,000 of them. Okay. So what's going on here? As usual, we're going to go over these unusual options to give us an idea where Amazon will be going, because August 4 is actually the day after they report earnings on August 3 after hours. So this is a very unusual trade to be making, possibly an earnings trade. So we'll go over this and also show you how we are trading Amazon based on these unusual options. So August 4, here they were. We believe at the 130 strike, because this is volume is greater than the open interest here at 2,722. These are opening trades. Okay. For the 140 strike, the opening interest here is 22,000. So that's actually greater than the volume of 19,000. So these could be closing trades. So that's something you want to keep in mind. However, it does not necessarily matter as much, because what we want to know is, are they bullish or bearish? Did they go long or short on this Amazon? Okay. So we know the 130, they opened this trade. We also know, based on our analysis of other data, that they are buying this call. Okay. And if they were buying this call, as you can see, the price of Amazon here at 130, as it goes up on the x-axis, the profit loss line will increase above this zero profit line on the y-axis. So this is profitable. So we know this is a long bullish trade here. Also, the Greeks are telling us positive delta, so that's bullish. If it was bearish, then it would be a negative number. Okay. Now, the reason why it doesn't matter whether the 140 was closing or opening is that if they had opened the 130 and closed the 140, we would only have the 130 call, which is what we had just analyzed right here, which is bullish. And if we were to take the other scenario where they had opened the 130 and also sold the 140 as an opening trade, you could see here that this is a vertical call spread, which is also bullish. You can see here, right? It just reduces the initial debit, the cost of the trade, because they had sold to open the 140 strike calls. Okay. It also reduces their deltas. You can see that their delta is now 26. It's much less, nearly half less than just buying the call at the 130 strikes. And also the theta is not as negative, right? Because they're not, because they're selling an option here with this trade, right? This scenario would be selling that additional option here. Okay. So, but the main thing is you could see that as the price goes up, this profit loss is still going up, right? And the Greek is positive delta, so that's bullish. So we know they're going long. So it's not as necessary to know which trade is the right one they did, because they're both telling us that it's bullish. Okay. If we were to kind of look at the cost of this trade, for example, this one, we know there's about 19,000 of them, right? Contracts. Multiply that by 545. Potentially, the cost of that trade would have been about $10.3 million. For the other one, $337 each, 19,000 contracts. That would be about 6.4 million. So all of these trades are in the millions. So a large investor would have had to put on this trade. Okay, so that's also why we are going to go bullish on Amazon. But that doesn't mean that we'll keep it for all the way through earnings. We're still going to have to evaluate the price. This is what we did. We sold the 140 strike calls here. Okay. And then we bought the August 18, 26 days away. We bought the 135 strike calls. Okay. So we did a different strategy. We usually have different strategies than the unusual options because we feel ours has a lower risk and not necessarily always going to be trading off too much. We found that our strategies have been more profitable than the unusual options. You can see that this is our trade. It's bullish still, and we have a positive theta here, right? And if we wanted more deltas, what we do is just add more contracts. If you add more contracts to it, you can still get the delta that you want, right? If you added 2 of these trades, now you have 29 delta. Add another one, you get 44 delta, right? So our trade is, we feel, is more profitable at the end of the day because it's also lower risk, better risk to reward ratio. So we look at that as well for our strategy development. And so if you're interested in our trades, strategies, or other stocks where we analyze unusual options activity, not just Amazon, encourage you to join our membership. We have videos exclusively for members only, where we have analyses and of these trades and unusual options. The one thing to note on the chart is also on Amazon is for the July 10 on this day when it had come down here at the low point here, you pull a Fibonacci here, actually the low end here, all the way to the top, the highest point recently here. Notice that we are bouncing from this 61.8% Fibonacci level here. So pulling this Fibonacci, this golden ratio here, acts as a very strong support, and that's why on Friday when Amazon went down below that, it came back up and ended the day at that level of 130. So the Fibonacci's are confirming something interesting is happening as well. Okay, so if that's something that you look at, the technicals, that's something to point out. Again, earnings is coming up. That's right before these unusual options expire. However, we will check the price action, see what happens, the data coming in throughout these days to see whether or not Amazon will continue to show us bullish signals. Otherwise, we may readapt and change our trade. Okay, so that's something that we also reveal to some of our members as well, that have access to our exclusive videos when we update our trades for incoming data that changes, or when we want to close trades to take profits. For example, this trade, only 212 cost, but has the potential to make 551. So you could make more than 200% here, right? A profit of 500 potentially here. And if it does start to go down, we actually can minimize our risk here because the purple line is actually above the blue line you could see here, which is the expiration date. So that allows us to manage this trade better. Okay, so that's why these strategies require more management than the just buying the call options here. Like this one here is very, very negative delta here, negative 22 delta. So every day this trade is losing value, and we don't want that risk. So we want to develop our own trade strategies based on unusual options that tell us whether a stock is going to go up or down, right? And then we can trade based on that key sentiment there, right? You can also do it with stocks. Stocks, it would be a lot easier. You just buy or sell stock. There's not much to decide there once you know the sentiment. Okay. All right. So that is our analysis of Amazon before earnings. Our first Amazon video for this particular earnings for the August 2023. We've done other videos in the past for earnings and have been mostly right on them, so you can take a look at those videos as well. We'll put a link also at the end of this video where we predicted the Prime Day. That was on July 11. That was around this day here, right? Here it was. Let's take that off. July 11 on this day. And this day, these 2 days were Prime Day. There's a special Amazon Prime Day. And we made a video on July 10, this day, where we got into a trade and explained why and analyzed unusual options activity, saying that it would go up, which happened. So we could have gotten this gain there by following our trades and our analyses. All right, so watch that video. You can learn a lot about how we develop trades based on this very unusual strategy that is very profitable. All right, and click the join button on our membership to learn more on how to get more exclusive videos on other trades, stocks, to diversify your portfolio, because that's key to also reducing your risk. All right, take care, everybody, and have a good and wonderful weekend.